Hello and welcome to Finextra. I'm Thea George and I'm here with Mark Wetjen of DTCC. We're at Sibos 2017 in Toronto and we're talking about globalisation. Mark, thank you for joining me.
Thanks for having me.
So tell me, what impact are geopolitics having on globalisation?
Well, I think they're having a significant impact. But I think in reality, as a practical matter, in the financial services space, it might not be as significant an impact as some people predict. I don't want to deny that the events are meaningful, but you just look at what's going on in the United States, for example. Well, let me take a half step back. Brexit obviously is a big event. The US election in November was a big event, a slightly unexpected event. And you listen to the rhetoric of the campaigns before both events, and you would be led to believe a certain outcome would befall us. But again, just focusing on the United States, in reality, this administration has made a number of appointments to occupy these various agencies and departments, and these people that have been appointed have been very non-ideological by and large, very practical, and I would actually say most of them have an international point of view. You have nominees such as, well, actually federal board member now, Randall Quarles, who's just confirmed last week, the chair of the SEC, Jay Clayton, the chair of the CFTC, Chris Giancarlo, and then the members of the Treasury Department, the Secretary Mnuchin and Craig Phillips, one of his advisors. All of these people have a very international point of view, I would say. And we're seeing from hearing from their public remarks and their private remarks that their commitment is to remain engaged in the international community and to be more precise, remain engaged with some of these really important international standard setting bodies. Bodies like Basel, IOSCO, the Financial Stability Board. So I anticipate continued commitment and leadership through those organizations. And in that respect, it's very much more of the same that we've been seeing over the last number of years from a policy point of view.
So the trends that you've described, is positive, is it negative? What are the challenges and the opportunities there?
Well, I think that the trend that we're seeing in terms of the policy response to these two big events, Brexit and the election in the United States, I think the trend has actually been pretty positive. From my point of view, you can't stop globalization. It's impossible to stop. So the question is, what kind of policies do you develop to try to manage that trend in a responsible way, and from the point of view of every country involved in this, in a way that's best for its own citizens. So I'm not a trade expert, but there will be some policy changes, I would imagine, in the trade space. But I don't see that as a retreat from the international world. That's more of a rebalancing of interests. And again, I'm not here to speak for the Trump administration, but just giving my perspective based on what I've seen and observed. And then on the financial services space, again, I think it's always how do we maintain and promote the interests of the institutions in our own country, while at the same time making sure we achieve these common policy goals that every country involved here has in one way, shape, or form. So policy goals such as financial stability, the mitigation of systemic risk, improving transparency, trying to ensure orderly markets around the world. All of these things are interests and goals that all the G20 members and probably the rest of the countries who have financial markets, goals that all of those countries have.
So turning to the market infrastructures business, as market infrastructures grow, does that create public policy issues, do you think?
Sure, absolutely. So one of the things that has been an area of focus around the world through the Financial Stability Board and through IOSCO, those two standard setting bodies I mentioned before, is how do we make sure there's resiliency at a market infrastructure like a CCP? And I think that's a perfectly fair debate. DTCC has been involved in that debate. We understand the legitimacy of the concerns on the policymaking side. Our goal, we believe, is to make sure we educate the policymakers, help them understand how DTCC actually might be a little bit different than some of the other CCPs. And so whatever policy comes out, we hope it's not a one-size-fits-all. So that's really been our main objective, but there's been no denial on our part that the importance of financial market infrastructures has increased a little bit, or even more than a little bit. And we understand there's a reasonable policy reaction to that. And so we've been engaged in that conversation. We think it's perfectly appropriate.
So we're here at Sibos, lots and lots of fintechs and lots of discussion about fintech here. How do you see market infrastructures, the fintech community and regulators kind of coming together over time?
one of the key things in all of this, from the regulatory side, from the policy side, is in many respects, there's nothing really new that's going on, right? Technologies have developed, they've been leveraged by the financial services space since its inception. And in fact, the financial services space, as you know, a lot of times is a first mover, a first adopter of a lot of these technologies. And so most of policy and regulation is designed to be technology neutral. So again, as I said before, the goals are not going to change from a policy point of view just because a firm decides that distributed ledger technology might be a useful tool as it serves its customers. The goals will not change at all. Instead, what the policy side has to do is understand the technology, understand how it implicates the regulatory framework in place today, educate themselves, the regulators have to educate themselves, make sure they have that understanding, and then be creative and flexible. Because a lot of times what happens, and I've already seen this in the last number of months, not so much at DTCC, but with respect to some other companies in our space. No rules have been changed at the market regulators in the United States, but there have been some new interpretations that have come out. So you look at something like the SEC's guidance that they issued just a month or two ago concerning initial coin offerings. Not something of particular interest to DTCC at the moment, but a new technology, a new way of raising finance, raising capital. And so the SEC had to speak to that, and they had to come up with a slightly different way of looking at things in some respects than they had before. CFTC has done the same thing. How do they interpret their rules when you've got an organization that's coming to the marketplace, wants to be licensed, but is using a new type of technology? So again, the rules have not changed. It's just how do we interpret our existing rules that, again, have those very, very important public policy objectives when we have these new technologies that are being used in the space.
Mark, this has been great. Thank you very much.
Thank you.
And thank you for watching.